What is good, guys? I want to welcome you to another discussion where we attempt to bring money and meaning around your life and your legacy. Every time you walk into Royal Bank, Bank of Montreal, CIBC, you would like to believe that your money is safe. That is, when you put your money in it, that it is safe and secure. However, safety does not necessarily mean smart. But in this discussion, I'm going to be explaining four things that you may want to consider every time you walk into a local branch of your bank. I'm going to be discussing the things that you may want to look for in terms of what happens to your money and the options that you have. You may want to keep in mind every time you walk into a local branch. But first, you may want to hit the like, subscribe, drop a comment down below. In case you haven't met me, by the way, my name is Leon Mann. I'm a licensed wealth consultant with Money Assist Financial. And what I do, I help hardworking folks, perhaps it may be yourself, but I help them to add an additional multiple 6 to 7 figures to their retirement portfolio. I'm able to do this by providing a free, no obligation financial guideline. This is much like a GPS. It's gonna allow you to map out where you would like to end up based on where you currently are. Now, the first thing that you should be aware of is the deposit insurance. In Canada, we have something called the CDIC, Canadian Depository Insurance Corporation. And what this does, it governs each and every one of your deposits with the bank. However, with the CIDC, it has a limit of $100,000. For example, every single one of your deposits are insured up to $100,000. What this means is that if you have over $100,000, let's say you have $300,000 in the bank, only $100,000 of that $300,000 is actually insured. And with the rate banks are these days, as you've seen before, banks can shut down, as you have seen what happened in the United States. So it's just something that you want to be aware of. Every time you deposit your money in the bank, just know that it is protected up to $100,000. After $100,000, however, your deposits or your money is not insured, right? It's governed by the CDIC. So that's the first thing, is the depository insurance. The second thing you want to consider is the interest rate, how much the banks are paying you for leaving your money with them. Now, what they do, they basically will save your money and they will take the difference because they're gonna charge to lend out your money in the form of bank loans. And the spread between how much they charge to lend out your money and how much they pay you for saving your money with the bank is the difference and the profit margins that they would collect. So in most instances, the banks will pay you about a 0.5% for your money, right? Every single year, they would basically pay you out 0.5% returns on your investment. And the difference is between how much they would charge to lend out your money in the form of bank loans, in the form of credit lines. So every single time you deposit your money, basically they are allowed to keep 10%, right? By law, they can keep 10%, and the rest they can give out in the form of bank loans, in the form of credit lines. And this is how they make their money. Now, the question is, are you positioning yourself in a place where you can benefit and profit from each one of these investments, right? That's the option that you have. You want to put your money where you're able to make interest on each one of your investments. So that's the second thing. The third thing is convenience may come at a cost. For example, you may have things like transaction fees, you have annual banking fees, you have credit card interest. All of this, the banks would charge you fees for you to use its services. For example, something as small as $15 to $30 per month can add up to tens of thousands of dollars over the years, over the decades, right? So in the long term, this is a big wealth killer when you're paying a whole bunch of fees in the form of annual fees, in the form of transaction fees, and in the form of credit card interest rates. Just another thing to keep in mind. The fourth thing is inflation. The effects of inflation usually will devalue your savings with the bank. Right now, inflation is around 2%, and every single year, inflation is around 1 to 2%. What this means is that if your money is sitting there, it's not doing anything, you are losing value on your money. For saving your money, you could actually be losing money. What you want to do, you want to relocate your money in a place where it can earn interest that is at least higher than the rate of inflation. Now, another thing, unfortunately, is that people depend on the bank for financial advice. There is one thing that we must consider. You see, the banks, they are in the business of lending, not financial advice or educating you on your finances. For example, if you explain to your banks about investments or insurance or even mortgages, they may be limited as to what they can provide you, and they would only select the services that is best for them. You see, when it comes to sales, it is not the same thing as advice. So what you may want to do, you may want to look at how much of your savings with the bank is actually insured. Remember, the CDIC insure your deposits up to $100,000. The second thing is to look at how much they are paying you for leaving your money with them. In most instances, they may actually be paying you 0.5% annually as a return on investment on your money. The third thing you may want to look at is how much in annual fees is the bank charging you, for example, right? In terms of annual fees and other fees like transaction fees. And the fourth thing is that if you leave your money with the bank, are you building wealth or are you remaining stuck, for example? All of these questions at least should help you make a better decision, right? It should help you make a better decision what to do with your savings or money that you put in with the bank. Myself personally, I would use the bank for transactional purposes like paying bills, like withdrawing money, but it should not be used for anything else. There's two phases to wealth building. The first thing is security. The second thing is strategy. Many people, they just want to be safe, but you have to have a strategy to make your money work for you. So guys, if you find value in this video, feel free to hit a like, subscribe, drop a comment, and also feel free to check out my website. It's leonman.ca. If you would like to know more on how you can move your money to benefit you, feel free to contact me anytime. I thank you guys for tuning in. Until next time, peace and love. Take care.